Let's be real. The crypto world is in an absolute freefall right now. Billions, maybe even trillions of dollars in value. It feels like they've just vanished. But did that money just disappear into thin air? Or did it actually go somewhere? We're going to find out. Let's follow the money.
Wow. It really feels like just yesterday that the big dream was a $500,000 Bitcoin. That was a serious prediction. But today, the whole conversation has done a 180. Now it's all about fear, with people whispering that Bitcoin could crash all the way down to $500. What a shift.
And that brings us to the big question, right? The one you're probably asking. Is this it? Is the party over? Is the great crypto bubble finally, truly bursting for good? Well, in this explainer, we're going to dig in and get to the bottom of it.
All right, first things first. To crack this case, we got to look at the evidence from the scene of the crime, the market itself.
And wow, the numbers, they're just staggering. Bitcoin, the big one, has tanked more than 36% from its all-time high. But it's not just Bitcoin. The entire crypto market, everything, has lost over $1 trillion in value from its peak. This isn't just a little dip, folks. This is a massive crisis of confidence.
Okay, so why is all this happening? To really get it, you have to understand this one super simple principle that basically runs the entire crypto universe.
And this, right here, is the absolute heart of why crypto is so wild. See, a stock is tied to a real company making real things. But crypto's value? It's pretty much based on just one thing: hype. How many people want to buy it versus how many want to sell it? It's a pure game of supply and demand.
And if you compare that to, say, the stock market, you see the huge difference. If the stock market starts to crash, governments can, and often do, step in to help. But with crypto, there's no safety net. It was built to be outside of all that, which is cool in theory, but it means when people get scared, there's nothing to stop the fall.
Okay, so we've established that the price is tanking because demand is tanking. So where did all that demand and all that money actually go?
Let's think about this like a pie. Imagine all of an investor's money is one big pie. Now, a smart investor doesn't just jam all their money into one slice. No, they cut it up. They put some in stocks, some in bonds, maybe some in real estate, and yeah, they have a slice for something risky like crypto.
Now here's the secret. Money in the markets, it doesn't just, poof into thin air. It gets moved around, it gets reallocated. So when another slice of that pie, like, say, stocks, suddenly looks way more delicious, safer, or more profitable, what do? You take your money out of that risky crypto slice and you put it where the better opportunity is. And that's exactly what's happening.
All right, so our investigation has zeroed in on three main suspects, three big forces pulling all that cash away from crypto. Let's open up the case files.
First up, case file number 1, the United States stock market. It's been on an absolute tear, and investors have definitely noticed.
I mean, just look at these numbers. They really speak for themselves. A 20% return on the Nasdaq, almost 13% on the S&P 500. For a huge developed economy, those are massive gains. So if you're an investor, you gotta ask yourself, why would I gamble on crypto when I can get returns like these in a much more stable market?
And this is where things get really interesting, kind of paradoxical actually. A lot of crypto fans thought the Trump administration would be great for them. But his policies, like cutting corporate taxes, ended up attracting trillions of dollars to the US, which supercharged the stock market. So ironically, he made stocks an even tougher competitor for crypto.
Okay, on to our second suspect. Now this one is a bit different. It wasn't about luring money away with great returns. It was about slamming the door shut.
What China did was, pretty drastic. They basically declared crypto trading illegal, period, and they're enforcing it strictly. Just like that, a huge chunk of the global market, all those potential buyers and investors in China, was just wiped off the map. That's a massive hit to demand, and it forces Chinese investors to put their money where the state wants them to.
All right, our final suspect. And this one shows how even something you might think of as kind of boring can play a huge role in pulling money away from the wild world of crypto.
So, over in Japan, the government is playing a smart game. They're making their own government bonds, one of the safest investments on Earth, way more attractive. They're increasing the yield, which is just a fancy way of saying they're increasing the payout. They're giving their own citizens a really good reason to choose a safe, government-backed investment instead of rolling the dice on crypto.
Okay,
So we've looked at all the evidence, we've interviewed the suspects. What's the final verdict on this great crypto crash?
So here's the big takeaway. This crash, it's not some random bubble just bursting out of nowhere. It's actually a pretty logical, rational reaction. Investors are smart. They're just moving their capital from crypto to other places that are looking stronger, safer, and more predictable right now. At the end of the day, it's all a classic financial balancing act, you know? When the traditional stuff like stocks and bonds are doing really, really well, it makes sense that the alternative, riskier stuff like crypto cools off for a bit. It's often an inverse relationship.
And that leaves us with the million-dollar question, or maybe the trillion-dollar question. These cycles, they don't last forever. So when these red-hot stock markets and super-safe bonds eventually cool down, and they always do, are we going to see that money start to migrate back? Will we see crypto rise again? Only time will tell.